Good morning, everyone. Welcome to Midwest Market Solutions Insider Commentaries on a Tuesday. It's July the 18th. Thanks for joining us here as we look at what's going on overnight and what we can expect today. I'll be doing RFD TV this morning, so if you have channel, I know it's on 345. If you have Direct TV, that's what I have, and we're on there. I'm not sure what other channels it's on Dish Network, but I know it's available, and some local cable channels as well. Our FD great source for market information and news throughout the day. I have DirecTV now, and it's available on there as well. So a lot of ways you can watch it, and I will be on 10:15 Central Time this morning, so make sure you check that out. As we look at what's going on in the markets, well, we're higher overnight in the grains. We're seeing sharp gains here. We've got a long ways to go to get back to our highs that we put in June, but I think that's our next target to go towards. The crop ratings did decrease, just like it traded expected. 1% ratings drop across the board in corn, soybeans, and spring wheat. So not a surprise there. What reason why we're rallying overnight is this crop is going to see some more stress this week. There was rains forecasted for a good portion of northern Iowa, where it's been extremely dry along the Minnesota-Iowa border, and those rains have shifted farther north. And we're going to go into Minnesota. They've had a lot of rain in Minnesota. They don't really need it, but it's not going to hurt anything. But it leaves Iowa shortchanged as far as moisture when temperatures are going to be the hottest of the year, and we're going to see some significant crop stress. Crop ratings already on the decline in Iowa, and we're going to see the crop continue to go backwards. So how do we handle it from a marketing standpoint? I've had questions this morning what to do with their crop. I really think this year is a year that you should be looking at storing the crop. Last year I had recommended not to store anything, to sell everything at harvest. This year I think it's a different story. The market will pay you to store the crop, and with the yields being poor, especially for our clients in the Western Corn Belt, basis levels should improve significantly after harvest. So I would look at making sales to meet cash flow needs, and then kind of scale back on some sales and use options as a way to manage risk. And that's key in going forward in your career, is managing that risk. And I think you do that with options this year rather than aggressive cash sales. So livestock trade should be affected by the higher corn prices overnight. We should see a lower opening in feeder cattle, and live cattle I think likely will follow along. Show list numbers are bigger this week, about 285,000 head, and packer margins on the decrease here. That should limit their availability of what they want to pay for cash this week. In fact, one sale barn yesterday was reporting $4 lower cash sale. I'll be back later on today on our website with more information. And again, RFD TV this morning, 10:15 Central Time. Have a great day. Good luck, good trading. This has been Brian Hoops for Midwest Markets.